Hey folks, welcome to Verified Investing's Trade Setups in Action video. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Today's date is Thursday, June 10th, 2020. All right, before we get into the action here, I just want to remind you guys, come follow me on Twitter. Again, at Gareth Soloway. You can clearly see the name right here. Just find me there, follow me. It's the best way to get awesome setups. And you can see here, I posted a chart, a beautiful trading setup chart explaining what's going on. We talk about the CPI data here as well. So lots to talk about. And I do post updates on Twitter. So it's a great place to follow me. And then obviously come to the website, InTheMoneyStocks.com, if you want to come find out what the latest trades are, the specific trades that I'm taking. All right. Take a look at the Bitcoin chart. I'm going to give you guys my latest update. People ask me every single day, do I still think it's going to play out as I have said it should? So far, the answer is yes. So yes, a couple days ago, I should say, when we dipped to 31,000 here, a lot of people were saying, hey, does this change? Does this mean we're going straight to 20,000, which is my ultimate target, before we get a bounce? The answer is no. Why? Well, because you never broke below the 30,000 low. That's the trigger. And remember, as a technical trader, everything you do is based off the chart. So it doesn't matter if they trade this thing down like they did a couple days ago to 31,000. If it doesn't break the bottom level here of support at 30,000, then nothing has changed, all right? And you can see what happened. Literally within a day, we're right back up in this range. Now, there is a trend line I want us to follow here. See these little tail highs here, here, and all the way to here? Put a trend line right there, folks, all right? So basically, you have a very crystal clear trend line that I want us following. That is your trigger point for a quick move up, possibly as high as the 48 to 50,000 level. So I want to be clear, folks. As of now, I still think there's a decent chance that Bitcoin, before it goes down to 20,000, rallies up to as high as 48 to 50,000. And again, that would be basically the neckline here of the head and shoulder pattern. Here's your shoulder, head, and shoulder that caused, once it broke, caused the drop down to 30,000, which I called and literally nailed to the penny on that. And again, that was done by calculating the exact target out, which is something we teach here at InTheMoneyStocks.com. But bottom line is, you have a very easy level to watch for a trigger to the upside. I would say any daily close on Bitcoin now basically trades 24 hours a day, but there is a day, obviously, based off the daily chart. Any daily close above, we'll say 38,400, and you should start a trek up again into the mid to high 40s, maybe as high as 50,000. And I still think down the line, you're going to come down to the 20,000 or even sub 20,000 level. At the sub 20,000 or around 20,000, I will be a very aggressive buyer of Bitcoin, as I think then it's going to go up to the 100,000 and plus level longer term. Now, what you're going to look for here is, assuming Bitcoin does break above this trend line and start trekking towards the 48, 50,000 level, you're going to hear a lot of bulls come out of the woodwork. You're going to hear a massive amount of people saying, hey, this is going back to the all-time highs. That's good. You want to hear that. That means that, again, you haven't flushed out the weak hands yet, which means ultimately it's going to come down. Don't believe the hype when you start hearing about Bitcoin back in the high 40,000 to 50,000 level. The only thing that would change my opinion on the 20,000 marker would be is if we stayed above this trend line. So if we got above this trend line here around 50,000 and you traded above it for multiple days and started to create a support line, then you could then start to revisit a possibility of 65,000, which was the previous high. All right, so again, to just be clear with everyone who's watching this on Bitcoin, everything here is technical. So my viewpoints won't change unless the chart changes. If the chart breaks resistance, it can change. If it breaks support at 30,000, it can change. Those are the signals that I look for as a technical trader for when my analysis will change. All right, so you guys know now. Let's get into some other stocks. Keep an eye on Apple, guys. I got to show you this Apple chart here. Let me get rid of some of these older trend lines here because I'm continuing to follow Apple, which is down about just under $1 today, because it is continuing to hammer on a major level. So you guys know, I mean, at least most of you know that even though I have some long positions, a lot of Chinese stocks I'm long. In fact, we took a 10% gainer today off a Chinese stock, MOMO. That was a great trade today. But for the most part, I'm bearish on the equity markets at these levels, even though we're kind of at new all-time highs today and we're kind of been hovering up here for quite some time. I'm just seeing too many broken signals out there that make me concerned. One of them that I'm keeping an eye on is the Apple chart. This trend line is so important. look at how many times you've hit on this trend line over and over and over again. If you break below this trend line, which currently sits at around 123.75, if you close a daily candle below that, you could trigger a massive drop on Apple all the way down to $95 approximately. All right, so the reason why I'm paying so much attention to this is because it has a huge impact on the market. It's the biggest company in the market at over $2 trillion. So if this were to go down to 95, it would easily hurt the indices, the S&P, especially the NASDAQ 100, and probably bring at least a 10% correction in on the markets itself. All right, so that is something I'm absolutely monitoring. I do want to show you the semiconductors. So while you're seeing strong action in the markets and the indices today off of the CPI data, and by the way, the CPI data, the Consumer Price Index, for those of you that don't know, consumer prices, it's a basket of goods where the price of all those goods is monitored. And so it's very easy to say, okay, well, the price of these goods overall went up X amount of percent, maybe 1% or 0.5% or 0.1%. That's how you get a gauge of inflation. So the inflation data today came out basically in line with estimates, which is showing inflation. There's no doubt about it. Any common sense person can look at, things that they're buying and see that they're more expensive. But the key here is that it wasn't super hot. It wasn't way above estimates like last year. Last month, it was way above estimates. So that essentially calmed the market down. Yields came in a little bit more today, hovering just below 1.5% on the 10-year, and that's good for technology. Technology's leading today with Amazon up $50, Google's up about 20, although Apple, again, as we saw, is not participating. Now, one of the areas that I'm seeing some interesting negative divergence price action, which is usually a market leader, and this is one of the things that makes me concerned about this market, is that Micron, look at the chart on Micron here. All right, so you have a very clear top, and you actually have a head and shoulders pattern forming here. It has not triggered. I repeat, it has not triggered, but you can clearly see shoulder, head, and shoulder. If you get a Micron break at approximately, let's call it $77, you will get a big move down on Micron. The calculated move on this is basically down almost as low as this $55 area. It's actually a little bit above, but there's a lot of support there as well. So be aware that this is just one stock of the many semiconductor stocks. And if we go to the SMH, which is higher today, you can see the semis are actually still in a downtrend. You're still making lower highs. High, lower high, lower high. You haven't changed that. And so the semis giving me a negative divergence here is a concern because the semis, again, arguably have led this market for years and are a great leading indicator. Other things that concern me about the equity markets, take a look at the transports. All right, if everything is so wonderful, why have the transports broken down and are even down today when the markets are rallying higher? And look at the topping tail there and look at the breakdown. So transports aren't interesting. Look at the housing. This housing stock, the home builders, XHB, huge topping tail, and look at this, bearish consolidation breaking down here as well. So to me, this is a market that is running on hot air. We saw today on the spiders, and this is a very interesting chart here. Let me go to the SPY. So this morning, and this is the last thing I'll say, I don't want to keep you guys for too long, but we saw a surge up initially, and then look at the institutions come out and sell, and then once we got into lunch, they stepped aside and the markets floated up. Look at yesterday, we opened up, we sold, and then in the late day when there was volume, the institutions sold. Look at on Tuesday, we gapped up, institutions sold, consolidated, sold again, and then they stepped aside, letting the market flow back up until late day sell. So my point is that over and over again, if you look at the last month, there are so many days where the market is opening higher and selling off early in the day, which is when the volume is there for institutional big money to sell, that you have to be also concerned with that price action. It's not a healthy price action to see the market sell off on 5 million shares and then, or 10 million or 20 million and then float up back up on 1 million shares. All right, that is a classic game that the institutions are playing to make sure that the market stays up and they can rinse and repeat and just sell the same amount tomorrow and sell again and use the small investor money in the very light period of the day to float the markets right back up. So these type of things, unbelievably important to kind of take note of. It puts me in a position where, yes, I am long. I picked up Alibaba yesterday, as I mentioned, I have other Chinese stocks. We closed one out for 10%, about 10% today. But overall, I'm short XHB. I'm short FedEx, which has had a beautiful fall recently. Take a look at FedEx. Look at this drop here on FedEx, which goes along with the transportation stocks as well, which we looked at the IYT. But there's a lot of signals here that are borderline a major correction. I'm not just talking about a little downtrend. I'm talking like 10% drop minimum in the indices, which could hit at any time. So I caution you, be aware. I think, again, there are some opportunities on the long side, but overall, my portfolio is nicely diverse with some short situations and some long positions as well. The longs, again, are situated in certain stocks that I think the valuation is good. The stocks have already been crushed. For instance, if you looked at the one that we sold today, take a look at MOMO. You can see this stock was all the way up here. It was making a nice little base here, and then it had a 3-bar surge. Boom, we're in and we're out for 10% there. Other stocks that I like, IQ. IQ got crushed in the Archegos Capital situation. Look at the move recently, starting to move up beautifully. TME is another one that's up today. That's coming off recent lows. Notice how these stocks have already been crushed versus a lot of the other high flyers in the U.S. stocks that haven't been crushed. All right, and then there's obviously AMC and the craziness there. Look at this great sell-off on AMC. It is off of the lows, got as low as 39. But as I explained, and again, sorry to drag this on, but AMC, ridiculous. You can be a meme player and just want to be in it for the hopes and dreams, but if you just look at the fact that, when the stock was trading at $35 in 2015, that was the highest point. The movie industry was booming. There was not really a lot of streaming services yet out there where movies were getting delivered on day one, even when they're in the theaters. And then you look at the fact that AMC had 100 million shares outstanding then. They've literally printed 400 more million shares, which puts the current price at like $160 to $180 a share if you were to compare it to the 2015 high when the movie industry was good, let alone now when the streaming companies are just, basically Disney's putting out at the same time as it's hitting the theater. You could pay $30 on Disney to watch a movie at home on your 80-inch TV in your nice relaxing chair with no one else, sitting right next to you kind of thing. So bottom line is, I hope you guys come check me out on Twitter. Come check me out at inthemoneystocks.com. You can join my services if you want my daily videos. By the way, these are the free videos. The ones I do for our members obviously go a lot more in depth. And obviously you get the trade alerts that I take as I take them as well. Have a good one, guys. Take care.